All right, let's get right into it. Is Bitcoin about to have a major crash? I mean, that's the question on everyone's mind, right? Because right now we're seeing this epic tug of war between some really serious long-term warning signs and a market that's just completely stuck. So let's break down what's really going on here.
So yeah, let's just cut right to the chase. Could we be looking at a major crash for Bitcoin come 2026? Well, the data is hinting that the risk is very, very real, and that's exactly what we're going to unpack today. I'm going to show you the 5 key signals that have pretty much the entire market on edge.
And look, this isn't just about one single red flag popping up. Nope, we've pinpointed 5 crucial indicators that, when you line them all up, they start to paint a pretty concerning picture, especially if you're bullish on Bitcoin at the moment. Okay, so first things first, let's dive into these long-term warnings. I want you to think of these as like the cracks that start forming just beneath the surface, you know? They suggest that the market's foundation, it might not be nearly as solid as the current price tag wants us to believe.
So what are we talking about here? What are these 5 signals? Well, we've got fading demand from new buyers, slowing investment from the big institutional ETFs, you've got savvy, experienced investors cashing out, a huge drop in risky bets, and, to top it all off, a classic technical red flag that has in the past basically marked the end of a bull run.
All right, signal number 1, demand. This is a really interesting one. The price of Bitcoin has stayed pretty high, right? But the number of new buyers coming in is actually slowing down. And that's a really crucial detail because it tells you that the recent price action, it's been fueled more by momentum and leverage, not by a flood of fresh new money coming into the space.
Okay, number 2, the ETFs. Now, you know the new US spot Bitcoin ETFs were a massive driver for this cycle. They brought in this huge wave of serious long-term institutional cash. But it looks like that fire is starting to die down a bit. The flow of money coming in is flattening out, which basically means the big players, well, they seem to be tapping the brakes.
And that brings us to signal number 3, the dolphins. So who are they? These are the sophisticated, really experienced investors who've been in this game for a long, long time. And what are they doing right now? Simple. They're selling. But hold on, this isn't panic selling. It's a calculated, strategic reduction of risk. It's a move we've seen them make right before major price drops in the past. And let me tell you, when the smart money starts de-risking, you gotta pay attention.
All right, number 4, let's talk about trader sentiment. We can see this through something called funding rates. Basically, this just shows how much traders are willing to pay to keep their bets on higher prices open. In a roaring bull market, these rates are super high, but right now, they're trending down. That tells us that even the short-term speculative crowd is starting to get a little nervous.
And finally, signal number 5. This is the big technical one, the 365-day moving average. Historically, this has been the line in the sand. It's what separates a bull market from a bear market. And for the first time in a good while, Bitcoin has broken below it. Now, does this guarantee a crash? No, but it absolutely signals a major shift in that long-term momentum. Okay, so those 5 signals sound pretty bearish, right? But here's the weird part. If you look at the price right now, it's not crashing. It's not really doing much of anything at all. It's just stuck. And this brings us to the whole other side of the story, the short-term gridlock.
And this really captures the central conflict in the market right now. You've got these major long-term warning signs flashing red that we just went over, but on the other hand, in the short term, the price is just drifting sideways. It's almost like it's ignoring all those signals. And it's this stalemate, this gridlock, that makes this moment so incredibly critical.
I mean, this is basically what a market in total equilibrium looks like. Every time the price takes a little dip, buyers jump in thinking they've got a bargain. But then, every time it tries to rally, sellers come right back in to take profits off the table. The result? You get this super tight range where the market is just completely undecided. It's building up all this pressure for a big move, one way or the other.
So the big question is, what breaks this stalemate? Well, it's probably going to come down to 2 key price levels. You can think of these as the battle lines. They're going to determine who wins this tug of war between the bears with their long-term warnings and the bulls trying to hold the line. All right, so for the bulls, the magic number to watch is around $90,000. This has been a major ceiling, a huge wall of resistance. If they can get a sustained break above that level, it would be a massive signal that the buyers have finally soaked up all the selling pressure. It would mean they're ready to push higher, and it would really throw a lot of those bearish worries out the window. Now, on the flip side, the bears, they've got their eyes glued to the support level around $87,000. This price has held up time and time again.
But a clean break below it? That would basically validate all those bearish signals we've been talking about, and it could open the door for a much deeper drop, probably targeting 85,000 first.
Okay, so let's put this all together. You've got the long-term warnings clashing with this short-term deadlock. If the bears do win this fight and that crucial $87,000 support level finally breaks, how low could we actually go?
To answer that question, we need to talk about a really important concept called the realized price. The easiest way to think about this is it's the average price that every single Bitcoin was last bought at. It's the cost basis of the entire network. And historically, this level has acted as the ultimate floor. It's the point of maximum pain during the absolute worst parts of a bear market.
Now let me be clear. This is not a prediction. It's just a really powerful historical guidepost. What past cycles tell us is that if a full-blown bear market does unfold, long-term buyers tend to step back in, and they do it aggressively, right around that realized price. And where is that sitting right now? Somewhere around $56,000.
And so that leaves us right here with the ultimate question. The market is truly at a crossroads. Is the weight of all these bearish signals finally going to crack the market's stability? Or can the bulls somehow manage to hold the line and defy all the warnings? So yeah, the long-term trend is definitely looking weaker, but hey, it's not a done deal yet. If you enjoyed this breakdown and you want to stay on top of how this whole story plays out, do me a favor and hit that subscribe button so you don't miss our next deep dive. Thanks so much for watching.